Gold is up 1% as we start off the week. And joining me here today is Alain Corbani, Head of Commodities and Fund Manager at Finance SA. He joins me on the sidelines of the Minds and Money conference here in Toronto. Alain, nice to meet you. Welcome to the show.
Thank you very much, Daniela.
So gold having a good start to the week here.
Yes.
$1 million question, can it keep it up?
Okay, this is a too direct question, right? So let's put it this way. We are truly on the camp of those who think that gold is going to go higher. We truly think that gold belongs to a cycle. It's a commodity, but it belongs to a cycle. It's cyclical. Gold mines are cyclical. That cycle started 3 years ago at the end of 2015. And we think that we have 2 or 3 more years at least ahead of us. So what we saw last week or today is just the validation of the theme that we are heading towards lower real interest rates. I'm sure that we're going to talk about this later on, and a lower US dollar. And contrary to the consensus, which is the US dollar is going to go much higher because rates are going higher.
So you think the Fed will reverse course here?
I think that the Federal Reserve has told us many times, whether it was under Yellen or Powell, that, and they have different wordings, but in essence they together get along by saying that the policy stance to normal policy is close to the 3.5%. So we know for a fact that Fed fund rates will probably go to 3.5%, and we're already at 2.5%. So the market is forward-looking. So the market knows that because this economy is heavily indebted, because the capacity to generate more growth is very limited, actually all the forecasts are for lower growth going ahead, rates have this capacity to go higher by 100 basis points, but not more. So the market, which has shorted heavily treasuries, is now reversing or might be a reversing trend and thinking, okay, hold on here. We have a limited potential for higher growth in rates. The dollar has gone up way too fast and higher up, mind you, because of negative news coming from Europe or China. But the reality is that those rates have a limited upside potential.
President Trump not mincing words when it came to the Fed last week, saying they're acting loco, they're acting crazy. Do you think he was right to say that?
This man is saying what he always said, which is when he was running for election, he said he wanted lower rates. And he also said that he wanted a lower US currency. And this is, and his, at least, what the only thing we can say about this particular is that he's consistent with his previous speech.
Alain, when you speak of gold heading higher, what are your forecasts here?
I hate this question.
That's why I asked you. I know everyone hates this question.
I don't like giving a target. I can only tell you that at $1,200,
right,
gold mines are breaking even. So $1,200 is the bottom. That's the first answer I can give you. The second one is that usually the cycle peaks when the net margins of the industry exceed 25%. Exceed 25%. So you have already the answer to your question.
And then let me ask you this. If we look back in time to the time when gold rallied to $1,900, and I know that's a level that many of our viewers want to see again, money was being printed. It was the time of helicopter Ben Bernanke.
Yes.
Do you need that as a base? Do you need to get back to quantitative easing? Does that have to be part of the equation in order for a gold rally to happen?
That's a great question. And thank you for asking it. Again, back to those real interest rates and to the US currency. When you have a heavily indebted economy, which is the United States, 100% of GDP, right? When you have inflation, we do have inflation. I'm not saying that we're going to have much higher or hyperinflation, but we do have inflation. Inflation is climbing, has been climbing for the last 2.5 years. When you have twin deficits. Remember those twin deficits. You're indebted, you have twin deficits, you have structural imbalances in the economy. Your nominal rates cannot go much higher to the risk of going into recession. So, to answer the question, real interest rates will remain low. We don't need quantitative easing. Real interest rates will remain low. The US dollar will weaken, and these are the two the highest negative correlation we have with gold.
Alain Corbani, I really enjoyed this talk. Luckily, you are on my gold panel tomorrow.
Yes,
so
indeed.
We'll dig even deeper into this. Thank you so much for joining us.
It's my pleasure, Daniela.
And thank you for watching. We'll have much more for you on Kitco.com. Thanks, Alain.